Hi everyone, welcome to Tuesday, where of course we take a look at the performance of the NZSX 50, being the main board for the New Zealand Stock Exchange. Before I jump across and share my screen, just the housekeeping rules, and this is for educational purposes only, definitely not intended to be personalised financial advice. For that, you do need to go and have a talk to your own financial advisor. But we'll take a look and see how the market performed last week. I'm recording this on Monday morning and the market is open. It's been open for almost a couple of hours and you can see we've got a little wee candle there on the right-hand side. And if I look up over here on the left, the main board for the New Zealand Stock Exchange is up about $15.71 or 0.12%. Right, just having a look though at the performance of last week, and we did unfortunately have another down week last week. So we've had 3 weeks in a row where the market has obviously closed higher than where it closed the week previous, which was great. Bearing in mind, I always used to say to people, markets are like breathing. So breathing out is when we're climbing, but every now and again we have to take a breath in, and that is where we obviously have a little bit of a down week. So as long as we're starting to see some more upward moves in our market than downward, that is a positive sign. Let's put our moving averages on. So we'll pop that on to 30 and we'll make it exponential. Right, so you can see there that the market is trading above that 30-week moving average, and that is a good sign. We'll also go over and we'll pop on the 15-week moving average and just get a comparison there. Right, and you can see that the market is trading above both the 15 and 30-week moving average, which is a good sign. We haven't got much divergence away from it. That's okay. Just looking down the bottom here at the RSI, so that's the relative strength indicator, and it just sort of indicates whether the market is in an overbought or an oversold territory. Obviously, anything up around 80 or even over 80 is an overbought situation, and anything down around that 20 mark is certainly oversold. Now, overbought does not necessarily mean to sell, as the opposite is with oversold does not necessarily mean buy. What it does is it just gives us an idea as to, are there a lot of buyers or sellers in the market? So you can see down here, we're sitting at just under 60. So we're in about sort of a middle of the range, nothing to get too excited about there. Just having a look down here on the volume, and we did see a fair amount of volume last week. We saw about 147 million. So that was up. It's certainly down though from the previous week, which was 153 million. Now, when I'm looking at a market, I want to make sure that if we're having a down week, that the volume is low. So it's not as low as what it was around this period here, which was the end of December last year. So it is still quite strong, that sell-off last week, but it's certainly not raising any concerns at this stage. It's something I would definitely keep an eye on. Let's pop this on the 1-year chart and we will just see how that is looking. And you can see here that on the 1-year chart, it actually brings these candles up to daily candles. And you can see that, yes, we've had a fair amount of sort of selling during last week. Now, obviously, the market at the moment is trading below that 15-week moving average. And because of that, for me, it means I don't want to look for any other buying opportunities. Even on a daily, I want to make sure that the markets are trading above both the 15 and the 30-day moving average, because if it's trading above those moving averages, obviously then, hey, it will mean that the market is in an uptrend. I'm not saying that it's going to be in a downtrend by any stretch of the imagination. I'm just saying, let's take a pause, let's wait and see what actually transpires. And of course, if we start to see some more buying again this week, well, then that can obviously change things. We'll just go back to the 5-year mark. Now, I also want to see how much volatility there is in the market. So all we do is we take the ATR figure here, and that's 259.21, and we just divide it by the current price. So that's 12,941. Times it by 100, and it gives us about 2% volatility. That's definitely within the realms of acceptability. Anything under that 5% is fine with me. It doesn't make any concerns or draws any red flags. Now, this week, so at this stage, like I said, we are just pausing with the New Zealand market. Just watch it, see what does happen. I'm just going to stop sharing. Now, this week, if you come back on Thursday, I'm not going to do a share and review. Instead, I've had some questions around how do you actually use Yahoo Finance. So what I will do is do a video on how to use Yahoo Finance instead and pop that up, hopefully for you to learn. Now, if you've got any questions about Yahoo Finance or anything to do with share trading, by all means reach out. I try to respond to everyone. And also if you do have a share that you would like me to review, I'm happy to do that as well. I have had a request come in for A2 milk, so we will take a look at that at some stage. But at this stage, I've had a request, like I said, for how to use Yahoo Finance because it's a tool that I use all the time. Would love to show you that. So hopefully you'll enjoy that, and I'll look forward to talking to you all again soon. Take care.